So we begin with what I call my general sort of strategy. And I wouldn't want you to think that, I have a deliberate sort of checklist approach for clients in this area. But I think it's always important to start with a review of who owns things, where the shares in a business or the equity in a partnership are currently situated, and where they should best be situated. I'm a great believer in wealth sharing from a capital tax point of view, but also from the income tax point of view. Generally, spreading wealth around, having as many taxpayers involved, if you like, in the structure, the capital tax structure of a business, will bring greater and more flexible access to those important capital tax reliefs. Where one is looking at a limited company and considering the capital tax structure between spouses, one should perhaps consider who owns what shares. For business asset disposal relief, of course, generally it's voting rights and control which are important. There is a critical 5% test there. 5% or more of the shares is required for an individual have entitlement to business asset disposal relief. But there's a bit of a conflict there, if you like, that the use of differential classes of shares can provide more flexibility over the sharing, the allocation of dividend income among family members. And many of you, I know, will use A ordinary and B ordinary shares to facilitate the sharing of dividend income more flexibly, perhaps between the older and the younger generation. Some people suggest that one can use inheritance tax strategies. Should we use the word schemes to obtain relief from inheritance tax by debt and sale arrangements? I'm very sceptical about that, and I expect them to be countered by the revenue at some stage. Also, they can damage entitlement to valuable assistance with care home fees and things like that for those clients. So one should be very wary of them, in my view. I give them only a very brief mention and advise caution. There are, of course, no inheritance tax relief for general investments, and one would then tend to have to look at where debts were structured against non-business as opposed to business assets in order to maybe mitigate overall inheritance tax liabilities.